Patriot Nation, unite. I've got a very simple question for you today. If you're trying to buy a home and you're trying to minimize your cash to close, what's the best loan situation for you to be in? Well, is it an FHA 3.5% down? Not bad at all. Is it a 3% conventional loan? Even slightly better, right? Is it a 2%, 1%? Well, guess what? I'm going to show you in this video a 0% down. That's right, 0% down conventional loan. And you want to stick around all the way through because I'm going to talk about, as always, I'm going to break down the advantages, disadvantages. I'm going to show you your eligibility requirements. As always, I'm going to put an example in here, but stick around to the end once again because I give you a QR code that you can capture with your phone that's going to send me the information to see if you're eligible, to see if you can get the program. Because if you are eligible, of course, you're going to want to use it. As always, let's kick off this rodeo right now. Hi folks, I'm the Mortgage Patriot, Kevin Fagan, on your side, nestled here in the hill country of San Antonio, serving proud Texans and all you great folks all around the country. Now, another great topic today, a zero down conventional loan. How is that going to be possible? We're going to get into that. But before we do, please hit the like and subscribe. And that really helps me bring through YouTube, their algorithms, all the videos that I provide. You can see some of my videos here in terms of down payment assistance programs that I've done in the past. So let's get into all the details right now. As a reminder, before I get into the eligibility of this program, I want to say to you, just because the down payment might be zero does not mean that you do not have closing costs involved. The actual check you write at closing is a function of what I call three buckets. So it's easy to keep this in mind, if you would, the three buckets. Your first bucket is your down payment bucket. That's the percentage of the down payment relative to your purchase price that you have to come up with at closing. The second bucket is your actual closing cost itself. Those are things like processing fees, underwriting fees, title fees, appraisal fee, maybe inspection fee, government recording fees, on and on. That could add up pretty quickly. That's bucket number two. Bucket number three, people forget about all the time, is the escrow cost. You have to build an escrow in the form of property taxes and property insurance that you have to pre-fund. So those are your three buckets. And so a loan, a zero down loan in this case that we're going to talk about, only affects that first bucket. You still will have closing costs in the form of bucket number two and number three. We'll get into that as I give an example. So let's talk about the eligibility of this program now. And there's not much to it, frankly. The first one is credit scores. You have to have a 620 or better credit score. Easy to define. If you don't have a 620 credit score, it's lower. If you're lower than that, in other words, let me help you. I've got some ninja tricks, as always, that can move you from a 580 to a 620 or better within a certain amount of time. And it's just that simple. It's just action steps you got to take and a little bit of time so I can improve your scores. If you're above 620, even better, you'll get just better pricing. So credit scores is 620 for this program. Secondly, your debt to income ratio, because it's a conventional loan, they have certain guidelines. Your front end ratio, which is your housing ratio, in other words, how much all your housing payment, which includes principal, interest, taxes and insurance, and HOA dues, all those rolled up in one cannot exceed 38% of your monthly income. And your back end ratio, which includes your housing ratio, cannot exceed about 50% really. So your debt to income ratios for this program are 38 on the front end and 50% on the back end. And lastly, and here's the one that restricts most people, is your income. This is an income restricted program. If you make too much money, in other words, you're not allowed to enjoy the program. So it's based on what we call area median income, AMI. Your income needs to be 80% of that AMI for that area. And I'm going to show you now how we calculate that. So I'm going to show you the resource that I use, and you would be using yourself if you like. I can do this for you, of course. But we go to the website of Fannie Mae Area Median Income Lookup Tool. So there you see it right there. It shows you the map. It's got a little search bar. You can type in your county in that space right there if you like. And what's going to happen is I'll show you an example in my county, which is called Bexar County. It looks like Bexar, but Bexar, Bexar County. If we type that in, you'll see the median income for that county is $89,300. And if you take 80% of that number, which is already calculated for you there, that number is $71,440. So if your household income is less than or equal to the $71,440, then you qualify for this zero down program. It's just that simple. So if you don't live in Bexar County, of course, type in your own, or I'll do this for you, but type in your own county there. It'll show you the median income for that area, and it'll break down the 80% figure as well. And you'll know, of course, if you fall into that category. So if it turns out you are eligible for the program, let's do a couple of things showing examples now. So given your household income, let's find out how much home can you afford. That's number one. And then we'll find out, using this program, what is your cash to close figure going to look like, remembering those three buckets. So let's do that right now. Let's take the example here in Bexar County. And again, I'll work through the numbers in your county in this same fashion. But in Bexar County, the median income, as we saw, was $89,300. 80% of that number to qualify for this program is $71,440. And so lo and behold, let's say that your household income is $70,000. So you're under that figure and you qualify. Great. Now what do? We got to find out how much house you can buy. We take $70,000, we divide that by 12 to get a monthly figure. That monthly amount is $5,833 per month. Great. Now we talked about the front end ratio can be no more than 38% of that monthly figure. So we take 5,833, we multiply by 0.38, and we get $2,216. How much house can that buy? Well, if you look at this little mortgage chart here, I estimated about a $245,000 house you see there at the top left. And then you go back to the bottom now, all the different payments, your principal and interest, your estimated taxes, your estimated insurance, private mortgage insurance, and your HOA dues, they all fit. And lo and behold, that payment is about $2,216. So what is that saying? That's saying, given today's market, given today's rates, given property values in my area and insurance estimations, your payment of $2,216 can afford about a $245,000 house. Again, that's here in Bexar County. I'll run those numbers for you, whatever county you're from. We'll see what works for you. So hopefully all that makes sense. And let's go on to what that cash to close figure would look like. Let's see how this impacts your cash to close, the actual check you'll write if you buy a home. So in our example, we have a $245,000 house. Let's go back to our buckets. In bucket number one, we have a down payment of 3% of $7,350. Now, the lender is going to cover that $7,350. How do they do that? They're going to give a second lien. So they're going to basically loan you the $7,350, but they attach it as a second lien, a silent second lien. What does that mean? Well, that means there's no interest at all accrued on it, and there's no interest rate accrued on it. So you're not going to make a monthly payment at all on this. The only time that it will come into play is if you sell the home, you will have to pay back that $7,350, or if you refinance outside of the institution that's extending this program to you. So otherwise, it's a non-event basically, but they're covering that first bucket. So now you're at zero for the first bucket. Second bucket is your transaction costs. We talked about the processing, the underwriting, the title costs, the government fees, survey, appraisal. All those fees are going to cost about, on this transaction, about $5,500. And bucket number three, your escrows, building a 12-month prepayment of your insurance and funding your escrows, taxes and insurance. All that total is going to be about $2,500. So your bucket number one is zero. Your bucket number two is about $5,500. Your bucket number three is about $2,500. So all told, you will come up, without any other help, about $8,000 worth of cash to close. Now, if you look at my video here, how to buy a $300,000 house with $1,000 cash to close, I go over in detail how to get that number down. But for our purposes here, you'd be writing a check for about $8,000 unless you get seller concessions. That's another component. If you look at that video, you'll see what I'm talking about. But I can probably get seller concessions for you, or your agent should be able to get seller concessions for you on some level. So if you get $5,000 seller concession, for example, minus out of your $8,000, now you're only writing a check for $3,000 to buy this $245,000 home. Pretty darn good deal. And you're only responsible in terms of payment for that first lien. That second lien is silent, and it's only a very small sliver anyway. Hopefully this all makes sense to you. So hold on, I'm going to show you something really cool now. So here is a QR code I want you to hover your phone over with, if you would, please. It's going to pull up a small questionnaire. There's only 3 or 4 questions, I believe. We'll receive it on our side. And when I receive that, I'm going to look up 2 things. I'm going to look up a grant that is different than this program, but I have another video on that. I'm going to pull up a grant to see if you're available for that based on where you live now. And then secondly, I'll pull up that Fannie Mae lookup tool, as we talked about, that AMI tool, and we'll see if you qualify for the zero down conventional program. So basically, I'm going to be looking at two different programs, a grant and the zero down program, see if you're available for either one, or if you're available for both, which is the best for you. I'll be able to reach back out to you and tell you, hey, good news or not so good news. Either way, we'll figure something out. So call me at 210-317-6514, or again, scan that code if you would, and fill out that little questionnaire, and I'll make sure to get back with you, and we'll see if I can help you out. So Kevin Fagan, Mortgage Patriot, on your side. Make it a great one.